Ladies and gentlemen, good day and welcome to Laurus Labs Limited Q1 FY25 earnings conference call hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Munish Shah from Antique Stock Broking. Thank you, and over to you, sir.
Thank you, Seema. Good evening, everyone, and welcome to Laurus Labs Q1 FY25 earnings conference call. Today we have with us Dr. Satyanarayana Chava, founder and CEO, Mr. V.V. Ravi Kumar, Executive Director and CFO, and Vivek from the IR team. On behalf of Antique Stock Broking, I thank the Laurus management for giving us the opportunity to host this call. I would now like to hand the call over to Dr. Satya for his opening remarks. Thank you, and over to you, sir.
Thank you, Manish, for your introduction. Thank you all for joining us on our Q1 FY25 results conference call. We are pleased to have this opportunity to update you on our progress and answer your questions. As we continue to grow and innovate, we are embarking on Laurus' most significant rebrand initiative in a decade, making the start of our new journey towards expanded horizon. Our new tagline, Chemistry for Better Living, reflects our dedication and purpose in leveraging scientific innovation and chemistry to enhance the quality of life for people around the globe. And I'm confident that the new identity will reinforce our global positioning as a provider of manufacturing as a service in the pharmaceutical and biotechnology landscape. We have begun our FY25 on a positive note, sustaining momentum in our key CDMO clinical projects and demonstrating resilience in our financial health. We are leveraging power of our wider and sustainable technology platforms and commercial excellence to advance our partners' pipeline projects and maximizing the impact of our robust integrated model in delivering long-term stakeholder value. We are currently engaged in delivering multiple RFPs involving multi-step complex chemistry, large-scale biocatalysis using in-house manufactured enzymes for our partners' clinical programs. I would say we have important and large opportunities ahead of us, and we are highly focused on realizing them starting second half of this financial year. We have invested significantly towards expanding our development and manufacturing capabilities over the last few years. And this has been painful because of significant deleverage. But we believe this will be very rewarding and will significantly support another transition at Laurus of converting from highly generic focused into a well-respected and diversified CMO-focused company. Our commitment to disruptive technology in cell and gene therapy space continued to do well, especially enabling broader access to innovative cell therapy product NexCAR19 for patients in need. In gene therapy, we are actively progressing on the construction of GMP lab with focus on manufacturing GMP viral vectors and gene therapy products. Moving on to our financial results, our Q1 results demonstrated continued strong resilience in financial health, reflecting robust business quality across divisions despite pricing pressure in generic APIs. I would also say that Q1 has been largely on expected lines as we prioritized a lot of resources towards delivering several clinical phase complex projects. The performance is expected to pick up through second half. For the quarter, we delivered a flattish revenue growth of 1% and achieved revenues of 1,195 crores. Strong growth in oncology APIs and firm demand in ARV portfolio was offset by slightly sluggish performance in CDMO division. Gross margins were strong and maintained above 50% range, while EBITDA margins remained subdued at 14% due to lower asset utilization and dilution from investments in growth projects and new initiatives. I would like to share key updates on various business divisions. In the CDMO division, we continued operational commercial improvements and recorded a sales of 214 crores. Revenue is on expected lines, driven by significant resource allocation to various clinical phase deliveries. This also reflects growing customer confidence in our wider technology platform and capabilities like hydrogenation, flow chemistry, biocatalysis, and large commercial capacity. For the full year, we remain committed to a healthy growth outlook, which is supported by scheduled project deliveries for key late-phase NCE projects in the Q4 of this financial year. Momentum in RFP continued from big pharma and large biotechs, and we are also increasing our business development efforts towards securing early-stage projects to widen the project pipeline. As mentioned earlier, we are working on over 70 active projects, ongoing commercial supplies for about 10 products, including APIs, as well as several advanced intermediates. Key CDMO focused growth projects is progressing in line with plan. Animal health facility under early ramp-up phase. Commercial validations are going on. Crop production ingredients facility qualification target by end of FY25. R&D center commissioned in the next month, which will further expand our R&D capabilities to support new business opportunities. Our focus continues on leveraging significant scientific overlaps and build diversified revenue stream from customers. In the generic API division, revenues from this division are at 664 crores with a 10% growth, supported from strong oncology delivery and firm demand in ARV volumes and growth in other APIs. ARV APIs retained volume-led strategy.
Ladies and gentlemen, thank you for patiently holding. We have got the line for the management reconnected. So please go ahead.
Thank you. Sorry for the disconnect of the line. I'll continue giving the progress on our generic APIs, especially the ARV APIs. Our ARV APIs has retained its volume-led steady momentum and reported revenues of 400 crores. The current order book for our product basket looks encouraging, supported by additional supply contracts secured through successful tender wins by our customers. We continue to maintain a leading market share in the first-line HIV treatment. Oncology APIs reported a Q1 sales of 120 crores, 120% growth year-on-year. We have completed validation of new oncology products at our Vizag site with increased batch sizes and currently waiting for regulatory approval for our customers. We believe our portfolio breadth and capacities, along with ongoing positive market dynamics, would continue to support additional volumes in this division on an annual basis. Other API segments, which includes cardiovascular, diabetes, and asthma, we reported sales of 144 crores, growing 6% year-on-year. Sequentially, sales declined by 24%, mainly due to timing of some CMO contract delivery schedules. We are working towards expanding CMO engagements and remain committed to long-term growth with a clear focus on cost leadership in select high-value APIs. During the Q1, we filed 3 DMFs, all in non-ARV category. With this, a total number of DMFs filed to date is 86. In the generic formulation space, we reported overall revenues of 274 crores for Q1, decreasing 4% over last year. On sequential basis, revenues decreased by 1/3, mainly impacted by global agencies' buying pattern in ARV formulations. Strategic JV with Concall has been incorporated and progressing well. Over the medium term, JV focus will continue on delivering synergies and enhancing product portfolio. Meanwhile, to meet the near-term needs of our partner, we have extended our existing CMO collaboration to include additional oral solid dosage manufacturing lines at our existing Vizag site. These expanded lines to go on stream in the next 18 months. Coming to LMIC business, overall market volumes have largely remained stable, partly supported from stable pricing trend over the last 2-3 quarters. We continue to pursue optimization program to counter any pricing impact. We believe the impact in ARV franchisee are broadly stabilized and are expected to stay in this stage. Coming to the developed market, we continue to perform well across our broader portfolio despite higher competitive intensity. During the Q1, we filed 1 dossier in US and obtained 4 final approvals, 3 in US, 1 in Europe. In US, while the price pressure had continued, we are working towards increasing the volume share on select products. Also, we expect to see the benefit from recent ANDA approvals in the next couple of quarters, supporting our anticipated full year utilization pickup. Cumulatively, we have a total of 41 ANDAs filed today. Of this, we obtained 21 final approvals and 14 tentative approvals so far. We continue to have diverse portfolio and pipeline, including products franchisee comprising of ARV, cardiovascular, diabetes, CNS, and gastro. We have a total of 62 products in the R&D pipeline, either under review or under development, having a significant addressable market value. On the R&D front, overall R&D spending to sales for Q1 FY25 was at 5.4%, increased by 35% year-on-year. Higher R&D spend is in line to enhance our pipeline and includes spends towards additional initiatives in cell and gene therapy assets. We continue to invest in portfolio with product-specific approach based on complexity and scale economics. In the bio division, we reported a sales of 43 crores. Sequentially, sales have recovered strongly due to customer orders. The growth was led by diversifying application of our CDMO services. We've initiated discussion with several strategic customers for long-term collaborations. We continue to grow our enzyme engineering and production for small molecule, clinical and commercial projects, which will augment our pipeline using green chemistry for sustainable manufacturing. Our plan to build larger fermentation capacity in Vizag has broken ground, and we're accelerating efforts based on availability of support services like ETP and other services. And we also wanted to utilize this facility for GMP pharmaceutical manufacturing. We expect this facility to be commissioned by June 2026. Let me share brief on our quality side as well. In Q1, the company underwent 32 quality audits by multiple drug regulatory agencies and several customers. Company has successfully passed audit inspections without any critical findings. This includes successful US FDA inspection of our 2 large API manufacturing facilities, Unit 1 and Unit 3 in Parwada, Vizag, which has recently received at EIR. In summary, our R&D-led commercial strategy is delivering on compelling growth projects. My confidence is strong and also growing that we are taking right steps to best position the company for value creation this year and take the company well into the future. With that, I would like to hand it over to Ravi to share financial highlights.
Thank you, Dr. Satya, and very warm welcome to everyone for our first quarter of FY25 earnings. Total income from operations 1195 crores against 1192 crores year-on-year. It is a flattish. As Dr. Satya explained, Q1 is largely on expected lines as a lot of resources are prioritized towards delivering several clinical phase projects, and the performance is expected to pick up mostly from H2. This was we already indicated in our previous call. Supported by on-hand orders for the project deliveries. Gross margin maintained at healthy level at 55%. This is due to product mix and some of the cost savings what we achieved in the raw material price negotiation. Our EBITDA for Q1 is at 171 crores at 14.3% is in line with the previous year quarter-on-quarter. But we expect improvement in the second half. Our diluted EPS for Q1 is at 0.23. Our ROCE was at 6%. Of course, because of the lower revenue and lower profitability, the ratios may not be looks comparable. On the capex front, we invested close to 125 crore in this quarter, and our net debt stood at 2,633 crores. And going ahead, we remain committed to delivering on our FY25 growth outlook, and we will prioritize investment into high-value business segment to drive medium and long-term growth. Besides, the focus will also continue to improve on our working capital efficiency. You can refer our IR presentation for more details. If anything additional information you need, please contact our IR, we will provide. With this, I would request moderator to open the lines for Q&A.
Thank you very much. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. We take the first question from the line of Sajal Kapoor, an individual investor. Please go ahead.
Yeah, thank you for taking my questions. Hello, Dr. Satya. In one of the slides, I mean, there was no slide number, so I can't refer to the slide number because there wasn't any. But it's one of those slides. It was mentioned that out of the 28 customer audits conducted in Q1, how many were CDMO client audits out of these 28 that happened in Q1? And what are these customers looking for? I mean, what draws them to Laurus when there are so many other CDMO companies in India? Thank you.
Thanks, Sajal, for asking that question. I would say at least half of the audits are done by CDMO customers. Some of them are periodic audits because they have to do audits in a stipulated time frame, and some of them from new customers which we are onboarding.
And is the intensity increasing? So what was the number, let's say 2 years ago versus today? I mean, do you see an increase in customer visits, customer audits, above and beyond the RFQ? So I know you mentioned RFQ are coming, but are customers actually traveling to India and physically seeing the facilities and the infrastructure?
I think there is a significant increase in visits, followed by the quality audits, followed by safety audits, and then they roll out the RFPs. So to get an RFP, we have to go through a long process. See, no big pharma, no NCE customers would like to give an RFP and a project without their commercial team visiting, without their quality team visiting, without their EHS team visiting. They can give a preclinical projects, but when we are talking about late-stage clinical programs, I think their audits are sometimes multiple days, sometimes involving multiple facilities also.
Yeah, understood. And on the Laurus Bio slide, it's mentioned that initiated discussions with several strategic customers for longer-term CDMO collaboration. And question really is, why are customers interested in Laurus Bio given that R2 is fully booked and new capacity will only come online when R3 goes commercial? So when there is no capacity available, how can we engage in discussions 3 years in advance? Because R3 going commercial, I think, is give or take 3 years away, right?
Is 24 months away. We are also building fermentation capacity at Vizag also, which will come little earlier to R3. And the long-term contracts, our customers who are willing to sign long-term contracts are visiting right now because they are running their projects currently at R2. It's not that we are bringing a new customer for R3. Actually, the customers who are using R2 for pilot scale of their programs are talking to us for the large scale manufacturing in R3.
Right. You mentioned Vizag fermentation, but that's a GMP fermentation and that's under Laurus Generics, if I'm not mistaken. That's not under Laurus Bio, correct?
No, it is not Laurus Bio. So there are 2 programs initiated when compared to the last 2 quarters and right now. Because of the higher demand of GMP intermediate manufacturing in our generic products and also some enzymes which needs GMP manufacturing will be anything related to GMP manufacturing and which involves organic solvents usage after fermentation, those will be done at Vizag. And the fermentation which doesn't involve any GMP steps, doesn't involve any use of organic solvents will be done at R3. I think that is a very easy answer. Why we are keeping R3 under Bio umbrella and another facility under Laurus umbrella. So we want to segregate GMP manufacturing and non-GMP manufacturing.
No, understood. And lastly, very quickly, on the OPEX side, during the AGM that was conducted few weeks back, you mentioned that today 80% of the scientists are on the CDMO side as compared to only 20% few years ago. And if I look at our scientific count, so 2019 we had about 200 scientists in the synthesis division or the CDMO division, versus today we have no less than 800, give or take. And so that's a 4-fold jump in 5 years. And now we have got this new Genome Valley Center coming up, which will add to our OPEX fixed cost further. So it's kind of nearly 5-fold jump in our scientists on the CDMO side, which is giving a significant high OPEX fixed cost, right? I mean, you mentioned H2 is when we see the benefits emerging. How confident are we that we are not misallocating capital or we are overestimating the demand coming on these CDMO services? I mean, is the customers giving us enough assurance that gives us the confidence to increase, 5-fold increase in the customer, in the scientists on the CDMO side?
This is a very great question, Rajji. So, as you mentioned, a lot of resources are being allocated currently for late-stage projects for big pharma. So, if you are putting resources on a phase 1 molecule with 30 steps and it will take 100 scientists, the outcome may be questionable. But currently, we are taking very minimum early-stage projects so that we don't put resources on a projects with uncertainty associated with that. So most of the resources are happening in projects with big pharma, with oncology. Some of the projects in oncology, some of the projects in rare diseases with high dosages. Our expanded R&D capabilities will augment our ability to take early clinical projects. As you mentioned in your investor presentation, we want to not to neglect increasing the funnel by taking more early stage projects.
Sajjalji, actually, we have not increased 5-time resources. So the resources, I think, if I'm not wrong, maybe 25% to 30%. But what Dr. Satya said is reallocating from
Generics to synthesis. That's what he's asking.
Yeah. So, and then
Understood.
additional OpEx because of the new R&D, yes, it will be done, but it's like your productivity also will improve.
Yeah, sure. And
Sorry to interrupt you, Mr. Kapoor. May we ask you to rejoin the question queue, sir? We have several participants waiting for their turn.
Okay.
Thank you. We take the next question from the line of Mr. Tushar from Motilal Oswal Financial Services. Please go ahead, sir.
Yeah, thanks for the opportunity. Am I audible?
Yeah, you're audible, Tushar.
Yeah. Sir, firstly, how much was the ARV sales for the quarter?
ARV APIs around 400 crores and formulations
552 oral AR.
552 crores. Yeah.
Overall 552, huh?
Yeah.
And so this reduction in the AR, basically trying to understand the jump in the gross margin when the custom synthesis sales has been lower and even the formulation sales has been lower on an overall basis. If you could explain the sharp jump in the gross margin and sustainable gross margin.
Sure. See, the gross margin improvement is based on one is the product mix. We have a significant increase in our oncology sales, and also the gross margin in APIs also increased because of the favorable pricing mechanism from ARV API RMs, and also the process improvements done in some of the key large volume APIs. These three factors led to the improvement in the gross margins.
Oncology, the proportion has been largely stable as a percentage of sales, maybe in fourth quarter or even in, let's say, the earlier quarters as well.
Yeah, the significant impact came from raw material cost, reduction in the overall large volume APIs, supported by the process improvements. What we have done in the previous quarters also came in the Q1.
Got it. So secondly, on this long-term CMO agreement which is signed in FDA, so two questions to this: how much capex will this be required? While this would be funded by the customer, and this is for a patented product or a generic product?
This additional CMO contract we are signing is to give additional manufacturing lines in our oral solid dosage form facility in Unit 2 for our partner. So currently we do about 2 billion tablets contract manufacturing there, and our partner is asking for additional capacity. So we are adding several lines, and we will give additional 3 billion tablet capacity over a period of time. And most of the capex will be funded in the sense they will give advance and we will install the capacity. Yeah.
But would this be for again the generic product or for a patented product?
Mostly this CMO contract is generic formulations. Yeah.
Got it, sir. And lastly, on this fermentation facility at Vizag, how much investment would be there and over what period of time?
We expect about 200 crores investment into Vizag, and we expect it to be ready by mid of 2026.
All right, sir. Thank you.
Thank you.
Thank you, sir. The next question is from the line of Mr. Balaji Boina from Kotak Securities. Please go ahead, sir. Sir, Mr. Balaji, your line is in the talk mode, sir. Please go ahead with your question.
చెప్తారని అన్నారు.
As there is no response, we move on to the next question from the line of Krish Mehta from Enam.